Hello, everyone. This is Craig Brelsford with RedChip Companies. Thank you for joining today's event with Blue Gold, which trades on the Nasdaq under the ticker BGL. With us today, we have Andrew Cavagan, the CEO of Blue Gold. We will begin with a brief presentation in a moment, and then we will open the event to your questions. Welcome to everyone joining us today on X, YouTube, LinkedIn, and other social media platforms. To submit your question, we invite you to join us on Zoom. Use the link provided. Once in Zoom, click the Q&A button at the bottom of your window and type your question into the text box. Before we begin, please allow me to read the Safe Harbor Statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Andrew, please go ahead.
Thank you very much, Craig. Welcome to this webinar for Blue Gold, and good morning, everyone. Okay, so to give an overview of Blue Gold's position and our strategy on this slide. We are a gold mining business. We listed in June last year as a gold mining business in dispute over our main asset in Ghana, and our focus remains on the return of that asset and also acquiring other producing gold mining assets. So we're a gold producer, but critically, what has evolved in our strategy is that we are focused on tokenizing that gold in order to sell directly to the end customer. So you can buy gold directly from the mine, and we think that makes it a much more engaging proposition from a customer perspective to engage with the provenance of where the gold's come from. And it is a first mover within the mining space to actually tokenize the gold for direct purchase from the end customer. As a business model, it also enables us to generate recurring revenue from the gold. So instead of just digging it up and selling it once, as every other mining company does, we'll be digging it up, storing it, selling the digital tokens, and then making money, very small amounts of money, but every time those tokens change hands. And that gives a high quality revenue on top of the gold mining business. So we're excited about that. We have recently launched the full public launch of the standard gold coin, which is the digital gold. And we are doing that to make sure that it's all working properly in time for when we start producing our own gold in the future. So this presentation takes you through where we are on that journey from the production, highlights some of the things that we think you should be focused on, and we're looking at this as a stock. And we also go into a bit more detail on the token itself. So just a few highlights for those of you who've been following the stock. There was an analyst report puts the share price at target at $20, excluding the Bogoso Prestea mine, which is the flagship project that we listed with in dispute with the government. We also recently had an analyst assessment of what the arbitration claim, if it ends up being an arbitration award, could be worth to the stock, which is an additional $9 on top. The other thing to point out is that we are working actively on a pipeline of opportunities for acquisition, and I'll come to that later. All of which add to they spread the production potential away from just being reliant on a resolution in Ghana. And overall, our strategy is to reach a mid-tier multi-asset gold production of 500,000 ounces a year by 2030. So that's where we sit. That would make us a multi-billion-dollar business compared to comparables gold producers in the market. We have a Nasdaq listed company that's attractive to many mine owners to either vend their assets into or to merge into, that creates opportunity. And we have a team, an experienced team and successful team that has the capacity to take on those projects and supportive financiers to finance that. The flagship project itself, so Bogoso Prestea, 5.1 million ounces of measured and indicated resource. That's been established in an independent technical summary report produced by Wardell Armstrong, available on our website and through the SEC portal. Overall, it's a 14-year life of mine with an average of 250,000 ounce production per annum. The team that's running this business, Blue Gold, was involved in the prior business, the prior ownership of the mine. And during that time, we saw a reduction in the all-in sustaining cost. That's the production cost of 50% from $3,000 an ounce to $1.5 thousand an ounce. So very substantial improvement in operational performance. And so we've got the experience with this asset. And as I mentioned, we're also seeking a resolution with the government on this dispute, which we expect to happen during the second half of this year. But of course, if that doesn't happen, then we still have the arbitration claim, which, as I pointed out under key highlights, has an assessed value from an independent analyst or from an analyst of $9 a share. Okay, so on the mining operations, so I've given the high level on Bogoso Prestea. So it's in the Ashanti Gold Belt in Ghana. It's been operating since the late 1800s, early 1900s. And it's got 5.1 million ounces, making it one of the largest resources on the continent. It's within the largest gold producing region within the continent, the largest producing country of gold. There's been substantial historic investment in the mine, over $500 million. So that's in a processing plant, in the access roads, in the underground, the underground mine infrastructure, which makes it ready to operate immediately and of substantial value. The net present value of the project when we listed, and again in the independent technical summary report, assessed at just over $2,000 an ounce, with an NPV at an 8% discount factor, was just over $600 million. At today's gold prices, it's substantially higher than that. I've mentioned the existence of the processing plants. There's a 1.5 million ton per annum CIL processing plant, which is operational. There's also a 4 million ton per annum BIOX processing plant that needs refurbishment. All of this is set out in the technical summary report that we've filed. Okay, so just for those of you unfamiliar with the background on Bogoso Prestea, I thought it would be helpful just to set out here the evolution of our involvement in this project. So I and some other folk were involved in the predecessor of Blue Gold, called Future Global Resources. Through Future Global Resources, we acquired the Bogoso Prestea mine from Golden Star Resources in October 2020. At that point, the mine had 5 years of operating losses due to various poor operating decisions that had been made, and it had accumulated substantial debts. In fact, it was very much a turnaround situation. We at the time didn't realize quite how serious the challenges were. It was acquired in the middle of COVID, at a time when it was impossible to fly to the country and visit the mine. But we jumped into the deep end and realized quite how serious it was after we'd acquired it. Nonetheless, during 2021, 22, and 23, some very substantial changes. We made some very substantial changes to the mining method and to the operations that substantially increased the throughput, the tons that were put through the mine, through the processing plant. There was a reduction in the all-in sustaining cost. When we acquired it, it was very substantially loss-making. And by Q1 2023, we brought it back into profitability, reducing the all-in sustaining cost from $3,000 an ounce to $1,500 an ounce at a time when the gold price was about $1,800 an ounce. However, the legacy debts that had accumulated were weighing down the business, and we approached the government in December 2023 to say, in order for this to continue as a sustainable business, it needed to be restructured. And what we proposed was that the mine itself be moved into a new company, it's Blue Gold Limited, and a royalty be put in place from Blue Gold back to Future Global Resources, such that the royalty would pay the legacy debts that were in Future Global Resources, but without impeding new investment into the new company. So, if you like, kind of good bank, bad bank, and Blue Gold therefore would have the asset. We got approval for this restructuring in April 2024. The government approved it. And we then worked on all of the things we said we'll do. We had funding committed and lined up. We had a business combination agreement signed with Perception Capital for Blue Gold Limited to merge into Perception Capital, which was listed on the New York Stock Exchange. This is in August 2024. We brought our funders down, Gerald Metals. They met the minister. We said, right, we're good to go. We've got all the funding we need, not only to restart the mine properly, to invest in the sustaining capex, which we haven't been able to do because of the cash drain from the legacy creditors, and to enable the legacy creditors to be repaid. Unfortunately, straight after that, in September 2024, the government terminated the lease that was in the hands of Blue Gold over Bogoso Prestea, citing lack of financial capacity. We immediately, so now I'm in the Blue Gold camp, served a notice of dispute under the UK-Ghana Bilateral Investment Treaty, the BIT, in December 2024. And coming into 2025, that then initiated eventually the arbitration proceedings, the international arbitration proceedings, which are ongoing, and the court has now been formed. The International Court of Arbitration has been formed, and that is ongoing. We, as Blue Gold, continue to engage with the government to seek a resolution. We believe that they want to find a resolution, and so we are persevering to find a way for that to happen. And that is the situation we're in. So we have experience on this asset. We were successful in the operational turnaround, but we were weighed down by the legacy debts. We had a solution for the restructuring. We executed on the restructuring. We had the funding all lined up and continue to have funding lined up, ready to support the investment required in the mine to take it from where it is now, which is lacking some sustaining capex that hasn't gone in over the years. So improvements to the processing plant and improvements elsewhere, including a tailings dam raise. But we are prevented from moving forward at that at the minute. Okay, so moving on to what does this all mean economically for shareholders? So at the moment we are trading effectively as a as a shell. Yeah, the kind of the valuation and the where we're priced is as a shell with no asset in it, and with no the market assumes no prospect of revenue generation. The interesting thing here, though, is because of the claim we have with Bogoso Prestea, we can go from a $40 million market cap to something very, very much more substantial just by resolving this dispute. So the delta between the current valuation and a possible future valuation is very, very substantial, and is the reason why I'm so excited about this opportunity and why I have foregone any cash compensation in return for stock compensation because I strongly believe in it. So, yeah, independent assessment again, or an assessment from an analyst puts an assessed potential value per share of $32 just on the Bogoso Prestea mine. So leaving aside the underlying price target that they gave of 20. Okay, so moving on from Bogoso Prestea to the pipeline, which I referred to earlier. So this is a snapshot. I think it's fair to say that when working on a pipeline of opportunities, some come and some go. So this is by no means a commitment that all of these or any of these are going to come through, but this is where we are right now. And I wanted to give you a sense of how active we are on working on these opportunities. And you'll see that they are across the globe now. So we've got an opportunity in Latin America, which is the acquisition of a already producing asset. We're making good progress towards signing something there that we will be able to announce. It's small production at the moment, but can be ramped up. It's got a significant resource base, and with investment, we could ramp up production to a much higher number by the end of the year, and a multiple of that within a couple of years. But more detail will be given on that if we sign something. There's another opportunity in Southeast Asia, which is actually it's a direct from the mine supply of gold for tokenization. So we wouldn't be acquiring the mine, but the mine owner is interested in the potential of tokenizing the gold that's produced. And of course, what we're looking at here on this slide in particular, the way I've presented it, is how does the mining production fit in with the strategy of the supply of the gold coin, the standard gold coin. And so here we might be looking at $7 to 10, $15 million worth of gold coin, standard gold coin being issued on a monthly basis, which massively starts to inflate the market cap of the standard gold coin. It makes it easier for us to attract a market maker on Coinbase or elsewhere, which then in turn leads to more retail demand because people can see how they can trade in and out of it. So that's an exciting nearish term opportunity. There's an opportunity in East Africa, which might include a minority equity investment and some supply of gold. Again, similar quantities of gold, a strategic minority equity investment, and again, a second opportunity in Latin America that may look similar, but with a larger quantity of supply. Those two are further off and therefore less certain. But between all of those, by the end of the year, it's conceivable we could be looking at $60 million worth of gold being tokenized on a monthly basis into the standard gold coin, which starts to then build that market cap of the standard gold coin and create that recurring revenue, as well as us being able to make some margin on the gold that's produced. So where we own the asset, the margin might be as high as 50%. Where we have a strategic relationship, the margin might be more like 2 or 3%, where it's the offtake arrangement. But critically, it's about the gold being supplied on a sustainable monthly basis to boost the standard gold coin. Just in terms of the tokenization opportunity overall, this is more a kind of market slide to give you a sense. There's a significant forecast growth in real world asset tokenization. You can see on the left-hand side from 2024 up to 10 trillion in 2030. Stable coins value also growing, forecast to grow. What has grown from 120 to 300 billion over the course of a year. Commodity-backed stable coins growing at a high rate as well. So this is the kind of macro environment we're coming into. In terms of gold being tokenized, you can see that our view is that it offers a strong hedge to the dollar. So there's a 50-year decline in dollar purchasing power versus gold. There's I think 12 trillion of gold above the ground, 30 trillion in total, or 12 trillion in volts, I should say. So that's the opportunity for tokenization, and obviously a great deal more being produced in the ground, and that's the part of the market we're in. The standard gold coin itself, so it's a 1-to-1, 1 SGC, one standard gold coin to 1 gram. And critically, we're not tokenizing gold that's in the ground or in transit. We're only tokenizing gold that's in a vault with a bar number. So it's a certified bar, bullion gold bar, 995 or 49s. And it's on a 1-to-1 basis. So if you buy a standard gold coin, one standard gold coin, you have a 1-to-1 backing to a specific gold bar with that token. The other thing that we're really focused on in terms of use value for this standard gold coin is while we'll likely store the gold in one location, we are putting in place partnerships with other with traders all over the world that enable us to effectively transfer the gold associated with your token to anywhere in the world or almost anywhere in the world that you want to pick it up. So if you have a standard gold coin and you contact us and say, I'd like to physically redeem the gold. So if you got 1,000 standard gold coin, you got 1 kilo. I want to pick up my kilo bar in Singapore or in South Africa or in Switzerland or in London or in Brazil, wherever it happens to be. We will work with our partners so that on a couple of days' notice, you can turn up at that location and physically redeem your digital tokens for the gold in that location. So we think of standard gold coin as like a coat tag where you can go and pick up your coat, but critically you can go and pick up your coat anywhere in the world. The other use case is payment, so you can make payments peer-to-peer already through the app that we've got. So if you want to pay someone for the drinks you've just had in the pub using the standard gold coin, you can do that. So the dollar or pound or euro amount equivalent in gold at the point of transfer, you can do that. And even if the other person doesn't already own or hold the standard wallet, they can receive it and then if they want, they can redeem it in physical form, or they can use it for other purposes. So that's the kind of the basic use case is payment to other people and redeeming it. In due course, other functionality will be added, including trading it on with market makers on the major exchanges as the market cap of the coin goes up. So that's for the future. We've also talked in the past about credit cards, connected credit card usage, which we'll do through partners. Okay, I've talked about the team a little bit. We've strengthened it recently with Gus Gomez and Daniel Driscoll joining. Gus joins us as COO. He's got over 40 years operations and executive experience in large cap mining companies. and he brings a wealth of experience on all all of the three continents we're looking at, and also in Australia, in terms of mining all sorts of minerals. And he is working at the forefront of the review of the pipeline of projects that we're working on. Daniel joins us on a fractional basis, so he's worked as the general counsel for Endeavour. Previously, he also worked for Gerald Metals, and he comes with an M&A background as well as with a US securities law experience, and we're very pleased to be working with him as well. Myself, Lawrence, and Nate, you'll be familiar with from before if you've come across us. So my background is obviously the recent background with Bogoso Prestea, which I talked about earlier. Prior to that, well, in total, over 15 years experience working in sub-Saharan Africa on energy and mining projects, and initially in private equity for 10 years in London. Lawrence is CFO, and Nate is CTO. Nate's background is very much on the payment side. Successful entrepreneur, has developed and exited 3 businesses himself in the past. So I'm on the board of directors. In addition, we've got 3 independent non-executives, and Dan Awuridu seems to not be on here, but he is the chairman as well. We've got 3 advisory board members that you can see there as well. Okay, so moving on to capital structure. So we've got just under 41,000 shares outstanding. Public warrants exist, I think it's until 2030 is their expiry. They have an 11.50 strike price. So if they are exercised, it would come with $132 million. And then there's a small number of private warrants outstanding. About 20% inside ownership, including the management team and directors. There's a small institutional ownership which relates almost exclusively to the sponsors of the SPAC, both the former and the latter sponsors. There was a change of ownership in the SPAC partway through its life before it completed the business combination. One of the, I think, most interesting opportunities from a technical perspective is that as soon as we have our first producing asset or kind of concrete investment underneath this business in a mining company, we will be able to bring institutional investors in, which should substantially firm up the shareholding structure. So we don't have any specialist gold investors, institutional gold investors in the stock at the moment. And as soon as we are producing, we would expect to be able to attract those, which will create significant demand and as I say, kind of reduce volatility in the range of our trading price. Okay, so I think this is the penultimate slide before the end. So in summary, we have a cornerstone asset, a very substantial value that's not factored in, that would come back in on resolution of the dispute or on a successful arbitration award. Given the progression of the arbitration, we think there's an increased likelihood of a resolution sooner rather than later, and we expect something to be resolved during this year. The team itself has got a proven track record both with this asset from an operational perspective, and then we've broadened it with a much deeper and wider experience in the mining sector, both from an M&A and operational perspective. We have a pipeline of opportunities. I gave you a snapshot earlier, and our strategy is to build this to a multi-asset, multi producing business targeting 500,000 ounces by 2030. That's annual production. The digital extension of the production into standard gold coin, we think, creates a very interesting upside above and beyond the typical valuation approach on a mining company and enables a more direct customer engagement to be able to buy gold directly from the mines. And overall, we think that creates an extremely interesting asymmetrical value opportunity for people who are paying attention to the detail of what we're doing here. And yeah, we encourage you to look more closely. Thank you.
Thank you very much for that, Andrew. And again, thank you to all of the participants who have submitted their questions. There have been far too many for us to address today. However, we do appreciate what you're thinking, and we would invite you to copy and then paste your question into an email and send it to us here at RedChip, BGL at redchip.com, BGL at redchip.com. Thank you very much again. For more information on Blue Gold, you can also call us at 1-800-REDCHIP. You can visit the information page created by RedChip for Blue Gold. It's bglinfo.com. There, you can view and download the investor presentation and fact sheet and register for news alerts on Blue Gold. Watch Small Stocks, Big Money, RedChip's program featuring exciting small cap companies every Saturday night at 7 p.m. U.S. Eastern on Bloomberg USA. And finally, join RedChip's next webinar with Virax Biolabs Group today at 4:15 p.m. U.S. Eastern. Register for all RedChip webinars at redchip.com/events. Thanks again to our hundreds of participants today, and thank you very much, Andrew.
Thank you.